Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Jen Josey. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of Badassery herself, the real Jen Josey. Listener discretion is advised.
Hi, and welcome back. I'm Jen Josey, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's Badassery bestowment, my little badass gift to you. Today's topic is business bank account and why it matters. If you're serious about real estate investing, treating it like a real business from day one is a non-negotiable. One of the very first steps, opening a dedicated business bank account. It might not sound sexy, but this simple move will save you massive headaches and maybe some money down the road. Here are 5 actionable tips to make your business banking truly badass. Number 1, separate your money right now. Don't mix business and personal funds ever. A dedicated business account keeps your finances clear, protects your personal assets, and makes tax season way less stressful. Number 2, choose a bank that understands investors. Not all banks are created equal. Look for one that understands real estate, offers flexible business accounts, and has experience working with investors, and bonus points if they offer investor-friendly loans like DSCR. Number 3, bring the right paperwork. You'll need your LLC documents, your EIN, employer identification number, and personal ID. Having these ready will make the process quick and painless. Number 4, set up online banking and alerts. Getting digital from the start sets up online access and enables alerts for deposits, withdrawals, and even low balances. This keeps you in control and helps you spot issues before they become problems. And number 5, keep your records squeaky clean. Use your business account for all income and expenses related to investing. No exceptions. This makes bookkeeping, tax prep, and even getting loans in the future a whole lot easier. So, RAIN Nation, remember, opening a business bank account isn't just paperwork. It's a power move that protects your assets, boosts your credibility, and sets you up for long-term success. Take this step seriously and you'll be running your real estate empire like a true badass. So go out there and make your money work for you. Now on to today's episode of the Real Estate Investor Growth Network podcast. Today we have Lane Kawaoka, a renowned real estate maven with over a decade of experience and leadership of a portfolio exceeding 10,000 units as the visionary behind the Wealth Elevator. With a background as a licensed professional engineer in civil and industrial engineering, Lane has orchestrated capital construction projects totaling more than $250 million across both public and private sectors. After a successful corporate career, Lane pivoted from traditional wealth building models to inspire transformation among professionals, notably through his Top 50 Investing podcast and the innovative Hui Deal Pipeline Club. He empowers accredited investors to diversify and achieve superior returns, co-investing and endorsing ventures in Class C and B multifamily apartments, RV parks, mobile homes, and hotels. As the mastermind behind his second book, The Wealth Elevator, Lane shares actionable insights and a compelling roadmap to prosperity. It's my pleasure to have him on the show, so welcome, Lane Kawaoka. How are you?
Hey, good to have you be on. Sorry, we're dealing with little bit different technicalities with time zones today. Still early out here in Hawaii. I know the question that comes up later is like, what does it mean to be free? I'm not an early person. I do not do the 6 a.m., you know, miracle morning thing. That's just not my thing, you know.
I love the Miracle Morning. Actually, I am a big fan of Hal Elrod, so that's so funny that you brought that up. But thank you so much for waking up and coming and joining us because I know you have such a great message, and I am thrilled to have a fellow podcaster here on the show. So let's start at the beginning. How did your experience as a civil and industrial engineer, first of all, you got to explain what that is to the audience, but how did that shape your your approach to real estate investing?
Well, I mean, look, I was just good at math and science as a kid, and I just blindly followed what my parents told me to do. And then, like, when I was a kid, I went on Google and I figured out what is the highest professions that you get paid without going to more freaking college. And it was engineering ones. And I wasn't smart enough to be a computer science engineer, wasn't smart enough to be an electrical engineer, wasn't smart enough to be a mechanical engineer. Initially, even not even a civil engineer initially. So I got an industrial engineering degree and I went to work for the man and started
Mm,
to save my money. That was my claim to fame. I was good at saving my money. So a couple years in, got saved enough 80 grand to go buy a house to live in Seattle because that's what we're all taught to do, 401k and buy a house to live in.
yep.
And then because I did it so quickly and I just happened to have a job where I traveled all over for work because I was a construction supervisor and I was never home. So I just started to rent out my place and that was the start of this crazy real estate journey.
Interesting. So what does an industrial engineer do?
They just push freaking paper. I mean, there's nothing glorious there. And it's a very like, I mean, engineers are usually introverts, and there's a good reason for that. Engineers typically don't really work with people or, they work with things that were numbers on the screen. But realistically, I mean, they just like do a lot of administrative work that is silly. Like, I mean, I was usually like an owner's rep in charge of different construction projects. So hiring a consultant, hiring a construction manager, overseeing them, it's just like doing change orders. It's like really, I mean, at least the world I was in was very not mindless, but it was very soul-sucking in
Ugh.
reality, right? Like, and then my early years, was a construction supervisor. That was, dealing with, we would build railroad. So I would have like a crew of 30, 40 guys, what blue collar guys roll up to me. That was completely not engineering, but that was just all just management there.
Right. Wow. When you said work for the man, like a little bead of sweat appeared on my forehead because just the thought of having to go back to work for corporate America. Ugh. So, and I know a lot of the listeners are excited to get out of corporate America. So tell me how that transition happened for you.
Yeah, it was very, very slow. Bought that first property 2009 and started to rent it out. And that was the aha moment, right? Like I was like, wow, I'm making a lot of money here doing this. Well, initially I was like, wow, this is cool. I'm making some beer money. The delta between the rents and the mortgage was like 2,200 and 1,600. So
Wow.
to someone who didn't know anything about the numbers, I was like, wow, this is cool. And then a few months went by. I was like, wait a minute, if I just did this again a few more times, I'll be able to escape the rat race. And, obviously I didn't really care for the job I was in too much. I mean, who does, right? When you're new anything, right?
Right.
It's not gonna be super glorious. And, I've been told, I know people do these like personality tests, but I'm a bit of a maverick. And they say mavericks have a really hard time in the early stages of their career. They just don't like working for people.
Right.
But great entrepreneur mindset. But yeah, I bought a second duplex a few years later, and I don't do any wholesaling. I don't do any flipping, especially in the beginning. I would just buy it whole. So I would just do the 20% down payment, and I would just keep doing that. By 2015, I had 11 rental properties. I was buying those from Birmingham, Atlanta, Indianapolis. A lot of them were turnkey, ready to go, and still working the day job. Still working
Right.
the day job. So sorry for being long-winded, but it took me like
No.
almost a decade to leave the day job.
Well, I think it's really important to include that because there are so many people out there. Well, there's gurus that we all know about who say, oh, we can get you to, they sell these get rich quick schemes. And, it's actually very important for listeners to hear that it does take time and you need to make sure that that income is coming in that's going to replace your current income before you give the piece out to the man. So I do appreciate you saying that because it isn't easy overnight. Now, this was in Seattle you started. Were you living in Seattle?
Yep, living in Seattle, and then partially when I was kind of ready to, wrap up there with W-2 employment, moved over where I live now, Hawaii, where I grew up. But I will say that I certainly come from the camp of hold on to your day job as long as possible.
Yes.
But it depends, right? Like I made, pretty much six figures, right? If you make less than 50, I guess the paradigm is a little bit different there,
Right.
where it's like, yeah, just leave that. They're not hardly making anything there. So I certainly speak for people who make multiple six figures and trying to do the real estate thing on the side. For them, they may never leave their day job, right? Like a
Right.
dentist who can flip some houses on the side or invest in some apartments. They they may unfortunately always keep drilling teeth, even if they don't like it.
Hmm.
I know that that's not freedom, but it's just it is what it is. It's just money, right? What's your hourly rate? If your hourly rate at your day job is over like $100, $300, you're probably gonna be at that day job for a really, really long time.
Yes.
Um, and it's just almost like golden handcuffs. But yeah, I from what I did, like I worked my job probably way too long before quitting. But I'm not really a raging entrepreneur, burn the boats kind of guy too. So
Gotcha. Funny you say that. So you mentioned Birmingham and a couple other places. So I'm assuming you were investing out of state. Did you visit those places? Were they hands-on when you started scaling your portfolio? What was that like?
yeah, so initially I bought the first few units in Seattle, Washington. Bought it at a good time, right? That was
Right.
before the big run up of 2012. But as we all know, there's, primary and secondary and tertiary markets. The primary markets are going to be your New York's, your all of California, Washington, Portland, these sexy cities that people like to live in that drive the
Right.
price of properties up. Hawaii.
Yes.
It's just not going to work to buy rental properties there. Now, I'm not saying you couldn't not flip there. Flipping is a different strategy that I don't really do. But as far as buy and hold which was the huge strategy I was doing at the time, you got to really go to secondary and tertiary markets. So in 2012, I think I bought my first remote rental in Birmingham. It worked. So I sold off my Seattle stuff and did a 1031 exchange into, I think it was nine at the time, totaling up to 11. I think I
Wow.
got up to 11 in 2015. Had professional property management all over all of them, and still made it to work on time at 7:30 in the morning to my engineering gig.
Wow. Well, how was that by putting your money in the hands of other people, trusting them? Did you have boots on the ground that you knew, or how did you find the people who manage those? And the reason why I'm getting into all this, Lane, is because I coach for a coaching program called Rental Property Pro, and we actually teach students to invest out of state. A lot of students are in California, places like you said, the big sexy cities. And so we coach them to invest out of state in areas like that where the prices are low but the rents are still high. And it's like that's the biggest mindset shift that I have for students to find the right people for the bus that's driving their portfolio, basically. So how did you switch that mindset and put your trust in others?
Well, I did it step by step. So, I've been investing for at least a few years now, right? And
Hmm.
being able to touch it, feel it myself in Seattle. So I knew how it worked. And
Good.
and even from the start, I always had a professional property manager. I always thought that was important because I didn't want to deal with tenants. And at the time I was very hesitant of, I don't know, somebody freaked me out legally that, if you say the wrong thing, you'll be caught for discrimination and they'll put in
Right.
discrimination, so I was just like, let's get a property manager to deal that stuff for me, right? And, some people think 10% of the rent is a lot of money. I'm like, whatever, that's just a price of doing business. And I didn't know any contractors at the time. I didn't realize how easy it was to just go on Yelp or Google and, connect, talk with people. I was very introverted at the time. So I just went with property manager. So I guess from the get-go, I got used to relying on people. But from a investing standpoint, I got used I stepped up that ladder slowly. I had that first rental property nearby. And so by the time I bought that first remote rental, it was like, all right, I know how this business works. I have already put my trust in property managers. I know what they do. It's a very mature job in a way, or not mature person. It's usually the property manager is one of the like the lowest rungs of careers out there, and they change over so much. But it's a very like mature profession, I guess.
Hmm.
You can find them in any town, and that's maybe we can get that later. That's one of my big huge issues with us running apartments these days. You really need a good property manager, so a good person head on their shoulders. And unfortunately, these are the people that are getting paid that 40 to $60,000 level, and the good people you just can't keep,
Right.
and the bad people like just can't cut it. But anyway, all right, yeah, going back. So what I did was I would call around, talk to investors in that local area, who are the property managers they're using, and typically they're not the guys who sell houses. So I was like, all right, check the box, right? Because you don't want people who can sell houses because they're just flash in the pants, especially when you're buying Class B and C rental
Right.
property. So I met some guys. I felt good with them. Maybe that's a pattern of how I do business. So, I just get a good feeling, and can we have a discussion around things? And then I used them to buy the property. So that was kind of like some coin into their pocket initially, maybe greasing the relationship wheel. And that was good because they would tell me, yeah, this property is good, or it's on the bad street, because ultimately they have to adopt the problem
Right.
at the end of the day. So I always think that the property manager, where you're going to go and get them first and say, hey, I'm going to ask a favor of you. When I buy this property, can you help just be my third set of eyes? And you'll get the business after it. But I'm not going to bother you too much. But maybe I might give you a quick call to make the final decision on this. And I'm not going to try not to waste too much of your time.
That is a great approach. And how did you initially find them? If you're, on one coast and you're looking in, the middle of the country, how did you find these property management companies?
Investment forums at the
Okay.
time, when there were actually investors on those things and not
Yep.
just bots and random characters trying to sell you stuff. And then Yelp and different review
Okay.
sites, you know,
All right.
got
Very
me a
good.
little list of people to interview.
Well, I
I
know
did not
you.
go down there initially. Like the first several were sight unseen.
Wow.
Didn't meet the people either.
Wow, that is great. So I know you have scaled from single family rentals to large multifamily and you do syndications. And how did you transition? Like, what was it that pushed you to then go into more syndication type deals for these larger multifamilies?
Yeah, what it comes down to is like numbers and scale. So when I had 11 rental properties, I had maybe an eviction or two a year. Some kind of big catastrophe that happened every quarter, like a tree falling on the house,
Right.
or, you gotta, I'm always like, well, what's this hurricane coming through now, Florida or wherever. Like, is that impacting me? I peek
Pipes
over from time to
bursting.
time.
I just had a
Yeah,
pipe
like
burst at our property. Yep.
Yeah, like those aren't, level one issues, but like they happened every quarter for 11 properties, like one a quarter at least. And the evictions are the one that like are difficult because I would, at least from my run rate, like one third of those would end up to be like a big catastrophe where the tenant would get thrown out on the street and all their crap would be there. And then they would also like damage the property and I have to pay
Right.
20, 25, 30 grand to
Ugh.
fix the property. And that's like the profit for 10 years pretty much, right?
Hmm.
Like all just gone away, pissed away.
Right.
So, and then, dealing with the property managers, like you start to get the situation where, they have so many properties they're managing and they're just trying their best is at least what I think. And, they're just, you're playing manage the manager. And for 11 properties at a few $100s each, that's 33 to 4 grand per month after all expenses
Right.
and some reserves for CapEx too. And it's just not, I mean, it's good, right? Like initially, I'm not going to complain. That's like a third paycheck for a lot of people, but
Yep.
it's just most of my clients today, who are credit investors, they aspire to ten to $20,000 of passive income per month. So you're going to need 20 to 30 or 40 of these houses. So increase the exception rate by that. And now you can see it quickly becomes a full-time job. And just in my journey, like 2015, 16 was a transformation period for me when I started to get out of my shell, started to interact with other accredited investors. A lot of these accredited investors did not flip houses. I mean, maybe they did decades ago, did not wholesale houses. They were already doing what I did, but a lot of them have moved over to the next phase in life, or what I write about in my book, the wealth elevator, the second floor of the wealth elevator. Buying rental properties is the first floor, by the way, where all these guys are accredited, right? $1 million net worth or greater, and they have something to lose. So
And
when
real
you
quick, just explain what accreditation is, what the
Yeah,
requirements are to
I
become
mean, there's not
accredited.
really any certificate or anything. It's basically like if you have a net worth of $1 million or greater, and or you make over 200 grand a year. So, we have some like doctors who are just out of college, maybe even in student debt still, but they make over 200, $300,000 a year easily. So they're already bestowed accredited investor status. I think super fancy. But yeah, for a lot of those people, they skip right over into floor two of the wealth elevator, where, if you're, I would say you're making less than $50,000 a year to day job, less than $250,000 net worth or in credit card debt, you're in the basement level. You got to flip houses, wholesale houses
Right.
to try and get to that first floor, which is let's buy some rental properties. Let's try and pile some stuff up that isn't super risky. Buy and hold rental properties is pretty bread and butter. And that's what I did, right? Like I bought 11 of them and it took me almost a decade. And then I was still working my day job too. But it wasn't until about this time where I started to become an accredited investor on paper. And that was where I luckily crossed paths with dozens of other accredited investors into this unwritten world of like secrecy and secret handshakes. And oh, by the way, we don't want rental properties because they're high liability, right? We want to be a passive investor in a syndication because we don't want to spend our time on this. We don't want the legal liability, and we don't want the debt in our name, right? We want the general partners to put the debt in their name, and we want to
Right.
get diversification in commercial assets, not residential assets.
Well, I mean, you started with the wealth elevator here, which was going to be I wanted to get into a little bit later, but I want to keep going since you've already opened this book for us, and this is your second book, by the way. So you you're now at the second level. So it's being an accredited investor and investing in other people's projects. Am I hearing that correctly?
Yeah,
And then
yeah.
what's the third level?
Third level is kind of like the second level, but you've kind of surpassed. I'll just throw it out as a net worth of about $4 to $5 million net worth. Basically, you're financially free, where your passive income exceeds that of your expenses. Of course, it's highly variable to what your expenses are. Some of my clients, they are totally fine with a $2 million net worth because they don't live in California. Their kids are grown up. They're already paid for college already. Some other ones are younger and have a family of four that haven't hit college yet.
Mm.
So, they're gonna need more than 4 million. So it's more of a cash flow number, but like not everybody equates cash flow to a lump sum. So that's why I say it in lump sum. But after that, you go to the floor three. You may branch out of things out of real estate, right? Like I like real estate, got me to here, but that's another thing that I started to realize from other accredited investors. Everything I learned is from organically picking from my network
Right.
and being very selective, right? Because
Mm-hmm.
rich people always think that they're right, right? And part of that is you start to realize that these same things come up, right? Like infinite banking is another thing.
Right.
I was like, when I first heard of that, I was like, what is this, right? Sounds like a scam. But then you start to, a lot of this gets corroborated by the people you keep in company.
Yep.
And they're not here to sell you anything, right? And then these things are just come up as best practices from accredited investors or the third floor of the wealth elevator and above. I mean, we can get into later, but obviously there's the penthouse level and beyond, 50 million, $100 million net worth. Things I've kind of learned from that. What I try to do is like I don't really talk about things I haven't done myself or been next to, right? Today, some of our partners are very high net worth, and I get a lot of insights into what they do. Like for example, I didn't know this, but very, wealthy people above 50 million net worth, right? I would guess you would call that sort of smaller family office size. They don't really buy like 20 million or $50 million mansions. As that's what I thought, right?
Right.
Maybe because the only rich people I know are like athletes, and come to find out, come to think, right? Like athletes are like the worst people with money, so we should absolutely follow nothing what they
That's
do.
so true.
And maybe this is just an example of it. But these wealthy, I didn't realize, I just found this out like a couple months ago that wealthy people don't buy these huge mansions. They'll buy, I mean, really nice houses in the right areas, like $5 million houses. Not in California, because that won't buy you anything in
No, well,
California or Hawaii. But they'll have like several of these, and this will kind of be the legacy plays that pass it down to their kids as a clump, right? And the kids can do what they want with it. So they'll have like five houses of $5 million, so 25 million, as opposed to the one $25 million house. I'm like, who would have known, right? Like, I mean, this is just coming from a kid. Like, my parents were never accredited. I didn't have a rich uncle. My parents always thought rental properties were dangerous, right? That you get sued or they trash your house, right? Like that was
high
the
risk.
household I came up
Yep.
from. So.
Yep, exactly. So, how did you, though, go from single family homes into the multifamily whole aspect of things?
Yeah, I mean, there's like you said, there's a lot of guru groups, a lot of multifamily communities out there. This is back in like 2016. So I got involved in several of those different camps.
But do you
I paid
own the buildings, or are you an investor in the buildings? I missed that whole part of it.
um both, right?
Okay, gotcha.
Yeah, yeah, yeah.
But I mean, like, what was that step like going from, because the listeners out there are saying, okay, I have, 5 rental properties right now, but I'm ready to get rid of 5 different roofs, 5 different insurance policies. I want to now move to multifamily where there's one roof on the building, one insurance policy. I have, one management company for it. So how did you make that first transition, just for the listener who's like struggling to move to the next floor in the wealth elevator?
Yeah, I mean, here's the thing, right? It's different worlds for sure. The contacts and the resume that you build with single family homes, I mean, it help, I guess, but totally different, totally different. And which is why a lot of people, I mean, I know a lot of successful people who flip houses, they never switch over. They just keep rocking it where they are at. Here's the big, I mean, there's several barriers, right? Like the biggest barrier that people need to realize to buy one of these properties, if you're going to use debt, right? And most of us will use debt, obviously. You're going to need to, get a bank to give you a loan. And a lot of these guys will not give you a loan unless you've done these large properties before. So if you're listening and you're following, you're probably like, WTF, right? Like the chicken and the egg thing. So it's imperative to find and operating a group that is already doing this and somehow sign on the debt along with them so you can get your card too. Not a lot
Gotcha.
of people talk about this, but this is unfortunately the one reason why you may have to join up with one of these BS guru groups out there, right? Because you're in the vicinity of people doing that, and they're open-minded to bringing on an outsider
Right.
in trading for different services, helping out the general partnership.
Gotcha.
It's
I think that's very well said, actually, because you're paying for that proximity to be part of those groups sometimes, and there's amazing people in there. I've developed great relationships with one group that I was part of, and you build that trust because it's a totally different level as you describe. So I want to go into this Hui. Did I say it right? Hui Pipeline Club. And then because you invest in B and C asset classes, but you also do RV parks, mobile homes, and hotels. I don't think I do know someone who owns a resort, but I don't know a lot of people who own hotels. I've heard of boutique, like Airbnb, things like that. So tell me what that experience is like.
Yeah, I mean, I don't really know hotels too much.
Okay.
Let's just like I don't know mobile home parks too much. I mean, I do. I do enough to obviously invest my money in it, right? But so we operate apartments, right? Workforce housing, and then we also develop, right? So that's our thing. We are kind of, that's what we say we are operator. And what I realize is you got to diversify a little bit. I mean, I
Good.
like commercial real estate, like real estate in general. I understand it. I think that's the main thing, right? Like I understand the dynamic of, people moving in, moving out, occupancy, that type of stuff, especially in multifamily, right? And there's some carryover into like hotels, right? I mean, they're just different terms like RevPAR. There's certain
Okay.
things you look at. But for the most part, if you kind of see what I'm doing, I'm kind of just selfishly investing for myself, right? Like I'm trying to build a portfolio that I want to have. And that's the pool, like you mentioned, a lot of them that are in the commercial real estate realm. So that's what's kind of going on out there, right? Like there's certain things that we operate and there's certain things that I'll invest in that I don't really know too much about, right? Like, I'm not an operator in. I'm not gonna fake it,
Got
right?
it.
Like I don't know, but I do the due diligence on the operator, vet their track record, and I invest more as a passive at that point.
Gotcha. I mean, I personally am looking to invest in a parking garage just because I feel like the upkeep is going to be so much easier than dealing with tenants and things like that. So I was just curious how you pick those other avenues for investing. But tell me, what is this Hui Deal Pipeline Club? Is that your organization?
Yeah, I mean, it
Okay.
started pretty early in 2016. I think I had an organization similar to yours where we would teach people how to buy little rental properties
Okay.
remotely. Our group was a lot of them were accredited investors. I didn't know it at the time, and they would kind of say, "Well, I don't really want to." They might have bought one, and they're like, "Yeah, this is changing my life. $200-300 a passive cash flow a month. I'm
Hmm.
gonna have to do this 15, 20 times, like you said."
Yep.
And some of them just wanted, if you're on the second floor of the wealth elevator, it makes more sense to just skip straight to the bigger stuff.
Yep.
So at that time, I was kind of in these ecosystems trying to do it on my own, right? I would say, I don't want to talk too badly of these different organizations out there, these programs, but I don't, I think they kind of tell you the same thing that maybe ChatGPT could do to tell you to do, right? Talk to the brokers, right? Tell them the feedback so they think that you're smart. Do it for 1.5 to 2 years and maybe you'll get lucky and they'll actually give you a decent deal. But through this, underwrote a few hundred deals and I got good at underwriting deals. And I think that's the key part here, that even helps me today. It helps me, like if I got a parking lot, I would somehow know how to underwrite that thing from a professional underwriter's perspective. The truth is, when a deal operator gives you PPM doesn't tell you anything about the deal. That's just the legal structure.
Hmm.
Um, the real deal and is like getting the P&Ls and rent rolls and the raw data on it. And this is what I started to realize, if we use the wealth elevator construct, the people in the penthouse and above, like the family offices, we started to get around these guys, right? And I started to well, what did they do? Like it's like I got to the MBA and I'm like, what is Kobe Bryant? He comes to practice early. He does this, right? Trying to copy him.
Hmm.
And so I'm doing this with family offices. I'm like, what are they doing? And aside from the fact that, they're tax, they're legal, they have a typically an in-house person, right? All the operation side, they got the butlers and, all the helpers. all that aside, like on the deal side, right? How are they finding investments? They'll typically have a smart person who's had some property management experience, climbed the ranks, and is their chief investment officer. This is a person that can look at a deal and say, yeah, that's good. And they have industry level experience. Whereas personally with me, I'm just like, what do I invest in? Do I invest in a turnkey rental in Memphis? Oh, it looks good. I heard it on a podcast, or like, these flashy things that are really targeted towards retail investors, right? Retail investors typically never get P&Ls and rent rolls and run the raw data.
Right.
But that's what these smart cats do, right? They have, they'll usually have an underwriting team, and that's what we have, right? Like, I mean, sometimes I got to get in there and manipulate the numbers myself and see, but that's kind of how I operate today. I get a deal in whether I'm going to operate myself, right, from a broker, or somebody else that I hear from my network, right? That's the thing that's kind of developed over the years that I don't think you can shortchange at, right? Like the people I met in 2016, I know them and they know other people. So I've got that two rungs of people I know. Just like, you and I know each other. Like if I see somebody that we know with LinkedIn, I'm like, who's this dude, right? Like what's his track record? At least I can kind of verify people. But not knowing people, the way I personally do things, I always run the numbers first. I don't want to waste
Right.
my time talking
Yep.
to XYZ operator. I want to see the numbers first. And this is the way the family offices will work, or at least their staff will. They're going to run the numbers. But yeah, this, multifamily underwriting is they're similar, right, to strip malls or parking lots. It's all kind of similar at the end of the day. At the end of the day, it's just analyzing a business, a
Mhm.
P&L.
Yes.
So yeah, that's kind of the process, I guess.
Gotcha. Well, thank you for sharing all that. And I want to kind of wrap up the first part of this podcast here with the wealth elevator, because first of all, I love the title. Great job on that. But for the listeners out there, who would benefit the most from reading the wealth elevator?
I would say you need to at least be on the floor of buying rental properties.
Okay.
Because I would probably argue that you're not going to be doing that for very long, or you shouldn't. I've always said that, people, we had our coaching program for that type of stuff. I'd say all you guys are kind of on the fast track to just going straight to apartments and syndications. Don't buy duplexes, triplexes, or quads, because that stuff is super hard to sell, right? You want the
Interesting.
single family homes just so you can quick sell those things to an emotional retail buyer and get out.
Great point.
Yeah, you're a short timer,
Yep.
basically. So I would say, yeah, if you're on the verge of buying rental properties, yeah, check out the book. This book is definitely not made for people in the basement level. Like there's a lot of books written for those people, like Dave Ramsey, Susie Orman,
Hmm.
How to Keep a Budget, How Not to Spend $5 on a Latte. That's not the target audience here. It's made for mostly accredited investors, but I do think it's good to know kind of what's on the next level and the level next, right? Or like I mentioned, like as much as you can emulate like how a family office does things, the better, right? Family office is, they look at the numbers, they don't look at the silly pitch deck. They throw the broker deck out. Like this is superfluous. Like I see it all the time. Like some of the things I see so many webinars and pitches and deals through my inbox that I see all the retail investor traps in there. Like one of them
Right.
is like they show the map and oh look, there's Costco. Blah, 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 blah. Oh, it's Costco. I'm like, who cares about Costco? I mean,
Or
how many
the
jobs is
Amazon
that?
what is it called? The disbursement center.
Yeah,
That's
yeah,
a big one too.
exactly. That only has like 5 humans in it, right? Because it's all robots. I mean, sometimes you got to check, right? But yeah, that's institutions. They have access to CoStar, Yardi. They know what the rents are doing in a submarket because those institutions will do the rent comps. Sometimes it's not the best, right? But it's good data that's
Right.
somewhat linked across the platform in relative to each other. So that's when I realized that I was like, whoa, like now I realize how these institutions invest from New York and never get their butts over to this
Mm.
area. They kind of don't need to, right? Because
Right.
they're working at such huge scale. And that's exactly why you buy 200, 300 units because it all kind of falls out in the mix and you hit $1.13 a square foot in terms of rent, right? At the end of the day. I
Wow.
mean, try to be conservative, but like you kind of hit your number right there. Where single family homes is so difficult. Like they're all unique snowflakes and the rent ranges and rental comps. I mean, with the apartments, we'll typically do maybe $5,000 to $8,000 of renovations per unit, and we know what we get for that.
Right.
Like you can't get anything for 5 to 8 grand with a single family home. Maybe
Correct.
maybe just get like new windows on the front.
Well, we are talking away here. I want to get into the second part of the podcast here, which is what makes Lane Kawaoka a badass, which you truly are. And I use the acronym BADASS, and the first letter is B for book. What's a book that's made a huge difference in your life?
I wrote these down to prepare to do my homework here.
I am
So,
so impressed.
I don't really read books in the beginning, but I typically forget it. So this is just more fresh in my mind. But deep work, I
Okay.
think Cal Newport, I think everybody is looking for like quick tips, but at the end of the day, the hard thing is probably the thing that you should just keep doing. As I always tell my team, sometimes I get on them for like, you guys are doing things that feel good and makes you feel like you're productive, but doesn't really do the thing that we want.
Mm.
But I think part of that is alignment with Cal Newport's deep work is like the premise is like deep work is things that take multiple hours, multiple sit downs to handle. There's usually what I'm saying is like we're usually typically procrastinating that thing or not even identifying what that thing is.
Mm. Well said. All right, I got to check that one out. All right, the first A in badass is for advice. You've given us great advice, but I'm curious, what's the best piece of advice you've ever received?
Never take financial advice from people who are not financially free or their net worth is not there.
How true is that? And I think back because you referenced your parents before, because your parents, you sound like you were raised like I was, where you go to college, you get your degree, you work for the man, then you retire, and then you die. So, and maybe you get a little river cruise in between there. So, I love that you said that. So, I'm curious. I would never take advice from my parents. I mean, they're both past at this point, but they never achieved financial freedom. So, I think that's excellent. Do you have a person in mind that you have taken advice from?
No, like for me, I've never really had an official mentor.
Wow.
I mean, I've always thought it never made sense for them, right? Like, why would somebody wealthy take on somebody? Maybe I wasn't pretty, I don't know. But that's it. Like to have a true mentor, you need to have them hold you somewhat accountable. That's why I pay for
Right.
coaching,
Yeah.
right? Like I want somebody in there as opposed to it being their volunteer job, right? That
Right.
they're here today, gone tomorrow, only when it's convenient for them.
So true. I am a big believer in coaching. It's very, very important. All right. The D in badass is for drive. What drives you to be successful?
I don't know. I mean, I think part of it is unfortunately I'm an investor where I just put my money into the next investment and I always feel broke. So
All right.
I've
I will
been doing
take
that since the beginning.
you. You love the sleepless nights and all that stress that goes with it, and then you're like, now
Yeah.
I'm finding success here. What's the next challenge? I
I
love
mean, there's
that.
been successes, so it's not, it's not like I'm a faith believer, but yeah, just it's hard to just keep reinvesting.
Right.
But I think I believe, that's the way that you build the hockey stick.
Very good. All
Part of it is a
right.
tax thing too, right? Like if I keep investing, I get more depreciation, passive
Yeah.
losses, and then I use that to offset other gains. So that there is a reason behind it, obviously.
I know you have a whole talking points on taxes and things like that, which we didn't even get into. So, listeners, if you want to reach out to him, he's got some great advice on that. All right, I'm going to keep going here. The second A in badass is for aspiration. I'm a big goal setter. So, what is a goal you're currently working on?
I kind of take a stoic approach of, try to find something to invest in. I'm not going to say every quarter or every like 8 weeks, but I want to try and I have this idea of dollar cost averaging. I always constantly want to be going into deals. Now, sometimes different sectors have, different headwinds in their way, like multifamily, right?
Mhm.
Apartments or office right now. You get interest rates high, but I believe that, everything sort of self-regulates. When things are difficult to buy, that's when prices are somewhat down,
Mm-hmm.
right? And when all the signs are green, that's where everything is super expensive. But I try to diversify at least through the time component, right? Which is
Right.
known as dollar cost averaging.
Wow. That is way over my head. I married an accountant because numbers are not my thing, but he's a perfect business partner for me. All right. I'm sorry. Do you want to add something to that?
Well, I would say like, look, I don't have a crystal ball, right?
Right.
Nobody knows when the market cycle is going to happen. Now in commercial real estate, we just, things came off 20-30% off the peak, harder than it did in 2008. So
Mm-hmm.
right now is some would say it's the bottom of the market.
Right.
But I'm gonna go one further and say, I don't know. I don't know. I don't know if we're gonna see a double trough next week or not. I
Right.
doubt it, right? And I might bet some of my friends on the side, but I have an approach where it's like you never know, right? I have a humble approach. You just don't know when the market cycle is going to be. Just like you don't know
Right.
when Tesla's going to come down or
Mm-hmm.
Nvidia, right? Everything has a cycle. Um, and and so, well, how do you play that? Well, you just always constantly just dollar cost average
Right.
into things that you believe in. And I believe in like workforce housing, for example, right? So if I dollar cost average into the right things, and maybe I don't know if this is the case, but like Microsoft, right? I think Microsoft is gonna be around forever. But so that would be something that you just keep dollar cost averaging, just like an apartment building, right?
Right.
Of course, you take some flyers here or there. That's what family offices do. Maybe with 1 to 10% of their net worth, they go after very asymmetric plays. I don't know if that's Nvidia or not, or I don't do stocks, so don't follow me
Me
anything
neither.
I say with stocks. But more of a risky project, right? But
Right.
a select part of your net worth
Yeah.
is prudent when doing that.
Well, thank you for explaining that. And it absolutely makes sense. And so thank you for that. All right. The first S in badass is for systems. What systems do you have in place to help you achieve success?
I mean, I think we always just identify the next step. I think ChatGPT does that now, right? You ask it a
Yes.
query and it's like, do you want me to do this? Do you want me to align it into a PDF and so you're able to send it out? Sure. Right. I think that's something I've always done. It's like, well, okay, what's the next thing? What's the next thing? What's the next? I already had this discussion. Everybody feels warm and fuzzy. What's the next thing? What is the next thing we need to do?
That is a good system to have. All right. Well, the final S in badass is for success. What does success mean to you?
Waking up whenever you want and doing business with people you like and you get energized by, and
Mm,
and trying to stay away from people you don't. And I just keep on. I like entrepreneurship. I like investing in real estate and now things outside of real estate. So it gives me a challenge. It kind of like solves little entrepreneurial problems every
yep.
day.
Something
But
new. I love it.
yeah,
Very,
yeah.
very cool. So, how do the listeners find the Wealth Elevator? How do they find the Hui Deal Pipeline Club? Give us a shout out here and your podcast.
Yeah, check out the book on Amazon.
Okay.
If you guys buy the book, send me a receipt, email it to team@thewealthelevator.com. We'll hook you up with the PDF version and the
Nice.
MP3 version in case you're like me and don't know how to read super fast. Um, if you're too cheap to buy a $5 book, we got a podcast, The Wealth Elevator. I only do that every other week now.
Oh, okay.
Passive investing, kind of ran out of things to talk about.
Right.
There's not
Yeah,
much
a
to talk about in
lot of
passive
passive,
investing.
lots of
Yeah.
passive investing people on my podcast recently. So yes, very, very good point. And if they have questions for you, what's the best way for them to find you?
If you are an accredited investor, be glad to get on a consult. Shoot me an email, lane@thewealthelevator.com.
Wonderful. Well, I appreciate your time so much. I know it's extra early. I guess I should say mahalo. So thank you for waking up extra early to be on the Rain podcast. And I hope you have a fabulous day. Thank you, Lane. Appreciate you.
Well, thanks for having me, Jen. Aloha,
Abs-
everybody.
Absolutely. And that is all. Thank you for listening. And we'll catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josey by visiting therealjenjosey.com or become a member of RAIN by registering on rainmastermind.com.